Most days in the stock market are very similar to most days in life in general. It's going to be an ordinary day. It's going to go by, and there's not going to be anything too crazy that happened that made you really remember that day. But every once in a while, something so shocking happens that it almost ingrains in your brain. It's like, I remember that. That was crazy. That was epic. I can't believe that happened, right? And today in the stock market, it was one of those days. Today was one of the most shocking days I've seen in the market in 14 years. And I want to take you through what happened here today. And most importantly, I want to take you through why this happened, because I think it's important to understand the mechanics on why a day like this happened. So when you see something like this happen in the future, it can make sense to you. And it's like, okay, now I see why this transpired this way and this happened this way. Okay. So hope you guys enjoy this. As always, hope you get good value out of it. I appreciate every single one of you that subscribe to the channel. Also, Moo, check out the pinned comment down there. They're the commission-free stock brokerage, and they have an amazing offer right now where you can get, basically, you deposit any amount of money, set up an account with them, and you can get a $10 cash coupon. They also are giving away free stocks and a bunch of other amazing stuff on Moo right now. So definitely check out pinned comment, set up an account on there, and deposit any amount of money. Alrighty, guys. So first off here, look at the market. Insane. The NASDAQ was up over 7 percentage points. I mean, that's one of those moves that it's like, you can't even believe it, right? I mean, if the NASDAQ was up 3%, 4%, that would be massive. 7% is hard to even fathom. It's hard to even wrap your head around that sort of move. The Dow was up 1,200 points. The S&P 500 was up 5.5%. No, first thing, let me answer this first before we get into the heart of this video and going through everything that happened and why this happened. I want to show you something very important, because you're looking at this and you're like, why such a massive divergence between the Dow and the NASDAQ? The Dow was up 3.7%, which is still amazing, but that's a long way from 7% like the NASDAQ. Well, this is why, okay? Basically, the NASDAQ has massively, and I mean epically, underperformed the Dow, basically for the entire 2022. Usually, these are going to kind of move together. The NASDAQ's usually going to do a little worse than the Dow if the market's moving down. It's usually going to do better than the Dow if the market's moving up. That's the way it goes. But this sort of divergence of, going into today, it was over 23 percentage points in basically the past year. That is the furthest thing from normal. That's insane, man. That's purely insane. And so if you're wondering why did the NASDAQ so massively outperform the Dow, it's because the NASDAQ's been hurt the most. So if you're going to get risk on, it's the riskier, or at least seen as the riskier assets, which is tech stocks and things like that, those are going to see the biggest rise. And so the Qs are going to move way more than basically everything else is moving. And, a lot of the Dow stocks have held up very well this year. Oil and gas stocks, for instance, right? Big industrials like Caterpillar and many other various companies, of Coca-Cola's, Pepsi's, stocks like that have held up pretty decent that are many of those Dow stocks. So, if you're going to get a big risk on day, kind of a shocking move like this, it's going to move the NASDAQ more than anything, okay? If I just look at stocks I have money in, I mean, these moves were insane. Revolve was up nearly 22% today. Beyond, which I have a small position in, was up about 20% today. Shopify, which I have a small position in, was up 18% today. Smile Direct Club, which I have a small position in, was up 18%. Oatly, which I have a pretty big position in, was up 12%. Amazon, which I'm actually building that position pretty rapidly now at this point in time, that was up 12% here today. Fubo, which, I'm getting to be a pretty good sized position now at this point in time, is up 12% today. Meta, which I now have a massive position in because I've been adding Meta left and right recently, that was up 10 percentage points today. Incredible. Corsair, 10%. Palantir, nearly 10%. Skyworks Solutions, 9%, which is a semiconductor company. Qualcomm, massive semiconductor company, up 9%. The semis have been hit extraordinarily hard this year. So if you're getting any sort of risk on in the market, the semis are going to move up very nicely. Foot Locker, a retailer, 8% today. Incredible move. Look at Google McDougal. I mean, there's a massive company moving 7.7%. Oh my gosh. Nordstrom, a retailer, up 8%. That's Target, a retailer, up 7%. The Chef, up 7%. The moves are extraordinary. NVIDIA, up over 14%. This is a big tech watch list. AMD, 14%. We already covered Amazon. Adobe, 10%. PayPal, 10%. Intuit, 9%. Apple? What? Apple, 9%? What? You got to be flipping my flapjacks twice on Sunday. What are we talking about here? Apple 9%? That's incredible. You know how much buying pressure has to come in to make Apple go up 9%? Oh my gosh, that's a $2 trillion plus company. I mean, that's epic, epic, epic. Look at Microsoft, Mr. Softy, up over 8% as well. Oh my gosh. Intel 8%, Netflix 8%, Palo Alto Networks 7%. We already talked about Google McDougal, Micron, which is a massive memory chip company, over 7% move. And good old Tesla, which hasn't been able to go up for, it seems like, a while, finally has a really good day here, up 7%. The moves are epic. Look at e-commerce companies, my little e-commerce watch list. Affirm 24%, Chewy 20%, Shopify 18%, Etsy 16%, eBay 10%. Ecom was on fire today. Look at crypto. Oh my gosh. Solana 27% comeback, right? Meanwhile, these had been destroyed, but not today. Today was amazing. So, if anybody happened to trade these in the short term, you did pretty well for yourself. 27% Solana. Doge was up 19%. I mean, look at the moves. Ethereum 15% plus move. Bitcoin 11% move. Incredible moves there. The Cathie Wood whole stocks. Look at Unity Software. Almost a 30% move for Unity. Oh my goodness. Look at TARK, which basically is a 2x, ETF on Cathie Wood's ARK fund, up 28% plus today. I'll tell you this about TARK, okay? I'll tell you this about TARK. It's a debate on when Cathie Wood stocks, in terms of her funds going to start coming back. It's going to at some point in time come back. Maybe it started today, maybe it starts in 2023, but that TARK is going to be attract a lot of attention. I can tell you that when we go risk on again, TARK is going to attract a lot of attention. You're going to hear a lot of people talking about TARK. Trust me on that, because that's going to be the play that everybody's going to want to be in, because at that point in time, it's not like the last time when ARK was going up and people were like, that's good enough. Now people are going to want that 2x leverage on ARK, and that will be its whole situation there, okay? Now, setting up a day like today is very similar to like setting up a movie. It's got a whole process behind it, okay? Because you don't get an epic day like this, a historic day nearly, with NASDAQ up 7%. Like, try to see how many times in history the NASDAQ went up more than 7%. Try to find that, okay? You don't get an epic situation like that without a good setup. No different than you don't get a good movie without a good setup to that movie, right? And so how did this movie kind of play out here? And what can we learn from this kind of moving forward in this whole situation, right? Well, the first thing is the NASDAQ going into today was down 17, almost 18% over the past 3 months going into today. So we had a market that had been heavily damaged and heavily hit going into today, okay? This is very important, because when you're talking about a market that is, let's say, soaring, let's not even say the market. Let's say it's a stock. Let's say you got a stock, and your stock, XYZ Corporation, is keeps going up and up and up in terms of its share price, right? Well, now when you're going to go into, let's say, a big news event for that company, there's actually risks to the downside in that situation, because the stock just keeps pumping and pumping and pumping. And, if you go into an earnings or something like that, the expectations sometimes become way too much. And even if that company reports great numbers, it's usually already baked into the stock price and actually sets up for downside. And this is something that's extremely frustrating to investors, because investors will think a company's going to report horrible numbers, they'll get out of the stock, and then that stock will go up. But all along, the stock's probably already been majorly hit going into that, and so it has upside potential, right? And no different than on the other side, when you see a stock that just continues to, go up and up and up, I mean, shoot, everything's likely already been priced in for that stock if it just keeps going up and up, and they better come in with perfection, or their stock price is going to go down. And so the same exact thing happens with the market. Expectations going into today, based upon where the market's been trading at, extremely low. NASDAQ going into today was down about 18% the past 3 months. That's awful. Awful, okay? What about sentiment? I think this is very important, what I'm showing you here right now, okay? So going into today, there was only about a quarter of investors who were bullish on the market. The average is 38%. That's average, okay? So only a quarter of investors are bullish going into today, okay? So what does this mean essentially? Well, if you can have any sort of positive outcome, right, which we had a positive outcome today, CPI came in better than expected. That's huge. And remember this when it comes to CPI data, okay? We have been nothing but disappointed from CPI pretty much month after month after month after month after month for like a year now. For like a year. Every time we get our hopes up, it just gets shattered again and again and again. So we've had like a year straight of like horrible CPI numbers and usually coming in worse than expected. When you finally get a break in that and things come in better than expected, oh my gosh, is it a relief rally? Is it a relief rally? Okay. And when investors going into that are already not bullish, that leaves there a lot of potential upside there, which is all of a sudden these folks that are not haven't even been bullish, which is 75% of the market roughly is not bullish on the market for the next 6 months. All of a sudden they have to wake up and be like, oh shoot, what the heck? The market's rallying. I got to do something here. This is an insane move. Oh my gosh, I can't not be part of this, right? I got to get my year-end bonus. On top of that, this movie just gets better and better. Yesterday, we had complete capitulation type activity in the financial markets in general. And the reason being is FTX US, or not FTX US, FTX, .com, which is kind of their more international business, was basically, we know how that whole situation played out, right? And you went into this, right, with all these fears about FTX US, could they shut down, right? And those sorts of things. What's this mean for the crypto market? There was a massive epic crypto sell-off, which bled into the stock market. And so you had complete trauma in the stock market in general. Now, when you have a situation like that, you have already priced in a lot of bad news and a lot of fear because people that are panicking have already panicked because yesterday was a panic type day. And you can see it in the stock price moves. I mean, there was countless stocks down 6, 7, 8, 9, 10% yesterday, along with obviously Bitcoin, Ethereum, and all the cryptos were down massively. So it was just mass panic out there. And you come in with a day like today, and all of a sudden people are like, what? What? I thought we were in panic mode, not buy mode. What's going on here? Now, I've heard something from folks out there, right? And I heard this a little bit on some CNBC I heard, I was watching earlier. And they're like, oh, it's just the algorithms. It's just the computers out there buying, And I'm in 100% agreement because as soon as those CPI numbers hit, I was stayed up all the way to see CPI numbers. As soon as those numbers hit, you know what happened in the market? It skyrocketed immediately. Faster than even humans could be like, oh, let me go buy. It was completely computers and algorithms and the machines were running the show, okay? And that stock market just took off. The Dow was up 600 plus points, boom. It was incredible. The NASDAQ all of a sudden was up 3% plus, boom, snap of fingers. It was an incredible move. I think the humans came in, obviously during the trading day and just kind of bid it up more. But here's the thing, okay? You want to play that game? It's computers? What do you think it is on the downside? What do you think it's been this entire year? You think it's just been humans selling off? No. It's been obviously the machines and the computers and the algorithms reading this information. It's like CPI comes in bad, sell, 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 sell. And it doesn't matter the price these stocks are at. Sell, 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 sell. And that's the market we're in at this point in time where it's arguably less intelligent of a market than we've ever been in. And that it's shouldn't be that way because you should assume a machine is more intelligent than a human. But that's fine if we're talking about calculating a math problem or something like that, right? But calculating, being able to see to the future and understand why, this company's going to do well or why this company should not be valued at this price versus this price and things like that. The machines aren't sophisticated enough to understand those things yet. 10, 20 years, it might be, and it might understand better. But today they are not. And so they're kind of dumb. And if CPI numbers would have came in, 0.1% worse, it would have sold everything in mass today. But because it came in better, as soon as those numbers hit, let's have everything go to the moon. It's not a healthy market, I will say that. It creates better opportunities for us as long-term investors because we're going to get to buy stocks at just stupid prices that you're like, why is this stock trading at this price? Okay, I'll pick up more shares. It makes it a more dangerous market, in my opinion, for folks that are on margin. Definitely. Because you can get margin called obviously much easier in a market that just doesn't make any dang sense, okay? And it also, I think, makes it a market where you're more likely to get stocks that go massively overvalued, which obviously we saw play out at the end of 2020 and into early 2021. And people think that was just, people on Robinhood making those stocks go crazy. No, I guarantee you it was the machines and algorithms because those companies were coming in with really nice numbers at that given moment. Economic growth looked good and all the data kept coming in pretty good. And so the machines were just buy. And every time it was immediately massive moves upward that it was not really humans doing that. It was machines behind, and then the humans would come behind that and just add more buying pressure on top of what the machines were already doing. So I just think that's important. It's not like it only works one way. It works both ways. And, so because they don't ever sell you. I don't hear them ever say this. Oh, it's just the computer. It's just the machines. It's just the algorithms buying, when everything's being sold off. They're real quiet. Then it's like rational. Then it's like, oh, it's people. It's the people making the decision. No, it works both ways. And it doesn't make any dang sense, okay? No, the sentiment is still very like a Carl Icahn, right? Carl Icahn came out today, did a big interview, said that he still thinks we're in a bear market despite, today's rally, obviously. And I would say that's definitely the overall sentiment I feel out there in the market. And, even myself, I look at the stocks and it's like, oh man, it's fun to see that. It's awesome to see that. But at the same time, it does, you can't trust any rally. Well, why can't you trust any rally in the market? Well, because for the past year, every rally ended lower. Every rally ended lower. So it's not going to be until we are way out of bear market territory that anybody's going to trust any rallies. For right now, the NASDAQ's still down like 30+% from all-time highs. For right now, no one can trust any rallies. It is not until you get so many rallies in a row that the S&P's way out of bear market territory and you get the NASDAQ and Russell out of bear market territory. Until that happens, no one's going to believe any rallies. We could have another rally on Monday. We could have another rally on Tuesday, Wednesday, Thursday. And people aren't going to believe it until all the indexes are clearly out of bear market territory. That's when everybody starts saying, okay, maybe this is for real. But for right now, just because we had this massive move today, it didn't magically move everybody to the bullish side. I can tell you that. A lot of people are still like, oh, it's just a bear market rally. Now, if this baby keeps rolling into Santa Claus time, then you're going to see switchers left and right, and you will see the bandwagon get loaded up, okay? Now, I think this is very important. I showed this in a video a few days ago, okay? And, for the folks that are negative on the market, over the next, I don't know, let's just call it the next 6 to 12 months. Let's not even talk about the next 3 years or 5 years or 7 years or anything like that. For just the next 6 to 12 months. It's interesting because I listen to these folks, and these folks are traders at heart, right? They really are. And these folks are so negative on the market, but yet they won't look at history and they won't look at the data. And the fact is we have never, ever, ever in the past 50 plus years, ever had, basically 60 plus years, ever had a situation where 6 months after midterms happened, the market was down. The worst situation we ever had was in 2014, the market only went up 3.3%. For 6 months after midterms. That was the worst scenario. But I mean, you look at what usually happens 6 months after midterms. 23%, 17%, 24%, 18%, 23%, 18%, 23%, 21%. Keep in mind, this is S&P 500 moves. If we get that sort of move, you realize what's going to happen in NASDAQ stocks? What's going to happen to some of these beaten down dogs? The moves will be, I can't even describe to you how ridiculous it would be. 21%, 15%. The worst was a 3.3%. So it's interesting to hear these traders, still be negative on the market when they usually love to look at this data. And I'm like, this is one of the most important things you can look at, right? Are you really going to bet that we're going to have the first time in 60 plus years of a market being down 6 months after midterms? Midterms just got over. So I don't know. That's just a factor I think is worth at least thinking about. And especially when you see the moves, because they're usually epic moves. Like I said, the smallest move was 3.3% in 2014. The smallest move. So I'm just amazed that they just completely just disregard that, okay? The public count had a tremendous day. It was up over $83,000 here today. And the accounts in general. But once again, we can't get too excited about that. And the other thing I'll say about that is I think days like this are good just for the mere fact that they remind us of what it's like to have a green day. Because when you're just getting devastated and so many red days on top of red days, it can be very demoralizing. And you almost start to lose faith in the markets. You start to lose faith in buying the dip and those sorts of things. And I think a day like today just reminds you of what's going to be coming when the market truly turns. And maybe the market's already truly turned, or maybe it's going to be 2023, 2024. We could debate all that, right? But when the market actually turns, I mean, you're going to see a whole lot more green days than red days. And some days you're going to see some epic moves in your account. And there was going to be a lot of money to be made coming out of this mess. I can tell you that much. A lot of money to be made. Hope you guys enjoyed today's video. As always, make sure you check out Moomoo. Get that deal for pinned comment while they still got that going on, celebrating their 10th anniversary. Much love as always, and have a great day.